Marcus Kroek is a business coach, profit-first professional, and entrepreneur with over 40 years of experience helping business owners take control of their finances and build profitable, stress-free businesses. In this podcast, you'll get real-world strategies and practical insights to grow, increase profits, and create financial stability. Whether you're a tradie, a startup, or an established entrepreneur, Marcus's straightforward approach will help you build a thriving business. This is Business Unlocked.
Hello. What you're going to learn today is about the 5 drivers of growth and profit, the driver that people always ask for, but the surprising driver that you really need to work on first to make sure that it all works. A few years ago, Andrew came to me and he had a business that was doing about $1.5 million a year. It was a tire and mechanical business. He'd been in his business for well over a decade. He was doing pretty well out of his business, but he was just over it. He really didn't want to go to work anymore, which is a common thing for many business owners out there. He brought me in to help him ramp up the business a little bit. He was thinking about selling it, wasn't quite sure what he needed to do, but he did know that he wanted to grow it, and he did know that he didn't want his people to have to work any harder to make him any money. An interesting conundrum to have. So what that meant was that we had to do the smart work, not the hard work, how to make him more money without making him or his people work any harder. And what we ended up with after 12 months of work was a business that had grown 20% in revenue, a business that had increased profitability by 37% after paying me, employing a new person to take on some roles, elevating his assistant manager to the manager of the business, and him stepping out of the business from day to day. It also meant that his goal of acquiring an investment property within 2 years, we were able to achieve within that first year by getting him to set up an SMSF and make enough profit and set it aside in the right way that he had the deposit to go and buy that investment property. He was happy, he was enjoying life, and he was sleeping better. So, what are those 5 drivers? Well, that's what I'm going to take you through today. And I'm going to use the client journey, the process of people coming through your business and buying from you to help explain it. And I think these 5 drivers, what I refer to as the proven profit formula, are actually the backbone of planning and what you have to do in your business. And whilst when you look at the way I work, there looks as though there's steps and levels, if you apply your customer journey, if you look at that through your business, all the other questions can come off that. Okay, so let's have a look at that customer journey. What happens in your customer journey? Well, let's look at it from their point of view. They've got to find you out there somehow. They've got to then decide to work with you. They have to decide how much money they're going to spend with you with what they're buying from you. And they have to decide down the track if they're going to come back and buy from you again, whether you've done a good enough job or not. So now let's transfer that into your way of looking at what's going on. And I simply refer to it, as I said, as the proven profit formula, or the 5 ways that it's known as. Now, this starts with, how do they find you? So from your point of view, it's how do you go about generating leads in your business? That's what we have to know. And what we're looking at if we're going to grow the business, and the number one thing that people ask about when they say, I want to grow the business, is I need more marketing. I need more sales. And what they mean by sales is more customers coming through the door, which is pretty typical. People tend to know roughly or estimate how many customers they've got going on, and that they simply want to grow that business. That's one of our first measurements in the business, is what's your lead generation look like? What's the count of the number of people that are actually inquiring with you or that you're doing quotes for? This can be broken down more and more, but we're going to keep it at the 5 levels to make it clear. So lead generation, what's that number that's going on for you? And we tend to look at it over a longer period of time because that gives us better statistics, better maths, if you like, on the rest of what's going on. Then people have to decide if they want to work with you or not. So for you, that's all about your sales process. That's all about taking them from being a prospect, somebody who's in your target market, who's inquiring, to a customer. And we refer to that as the conversion rate. The sales process, the number that we need to know is the conversion rate. So for instance, if we have leads out there of 4,000 for a year, let's say, and you convert 1,000 of those people into customers, the conversion rate is 1 in 4 or 25%. So what's the lead generation number? What's the conversion rate number? And if we do the maths on that, say 4,000 by 25% conversion rate, we get 1,000 customers out of that. So that customers number is actually a number that is driven by the others. How do I improve my lead generation? And how do I improve my conversion rate? Gives us our customers that are going on there. The next thing that takes place, we said, well, they have to decide what they're going to buy and how much they spend. So does that make sense? Because if they're coming to you to buy a kitchen or they're putting their car in to get serviced, it's an architect doing some work, a solicitor. Well, let's have a look at that in the simplest possible way. And we refer to this as average dollar sale. How much do they spend on average? So some clients that come to you might spend $10 and some spend $10,000 to give a wide variety. We're using the simple mathematical mean average to get the idea of this. And, let's say it's $100 that they spend with you over time. So what we're trying to do, the other driver here is, well, how do we increase that figure? The best known methodology that I refer to is the McDonald's, would you like fries with that? So what they want you to do when you come in is not only order the thing you want, they want to upsell you by adding something onto the sale. Okay. And interestingly, while that's not something that's really practiced in McDonald's nowadays, we do see it in Amazon. Amazon's been the big one that's moved that forward so that people are very aware of it in their business, because they have the idea of when you buy something, they put the people also buy this. So that's adding onto the sale and increasing, hopefully, the transaction rate in the transaction amount that you're going to have. Some shops, when they're counting this, will not just look at the dollars involved. They'll look at the number of items that you're buying at the time, and they'll work on increasing that number in order to drive their overall dollar value of sales that are increased. So McDonald's have that. Do you want fries with that? It might be, in another case, an added value. So you see that a lot in cars. If you're going to buy a car, what you're going to have is the base model car, and then there's the next level. And the next level, you might go from cloth seats into a partial leather seat. And then the highest level, it might be a full leather seat. It might have, in the base model, air conditioning where you turn the fan up different levels, where when you get to the highest model, it might be completely remote controlled, climate conditioned with back and front ventilation and fans, all those sorts of things. So we're ticking off different boxes in order to get you to spend more money. You've decided on the car. Now we're going to try and get you to upgrade to make more, to get a higher transaction value from that sale. The next thing that happens is that you want the customers to come back. So once they've been with you, you're working on ways of how do I get those people to come back and buy from me again. Talked about kitchens out there. Well, a kitchen person, you might say, well, then not going to get another kitchen done anytime very soon. Like houses, the average time to sell a house is 7 years. They're still going to get it done. Well, the kitchen person might not sell you a kitchen at the time. Maybe you haven't bought anything else from them. Hopefully they've probably put in a added value process so that you get things like the soft close drawers, and you might get the little lazy Susan or whatever they call them now in the corner of your cupboard, and they've increased the value of your sale at that. But if they stay in contact with you, they might get you to put in a laundry, or they might get you to put in some cupboards. There's other ways of getting you to come back and buy more. McDonald's famously has also been involved in that. They've been a big player in that market where it's been all about the toys for kids. You can collect the collection. strangely enough. And that collection might have a toy now, and then in next week there's another toy, next week there's another toy, and they keep you coming back to get the collection of toys that you're buying from them. So that's one of the things we're looking for. And again, we're looking for, well, what's the measurement on that? How many times do they shop with you in the given time period that we're considering for all these leads coming through? So that we refer to very simply as repeat business, or the number of transactions they have with you in that time period. So again, we're going from lead generation through to conversion rate, through to average dollar sale, how much they spend with you, to how often do they buy from you, the number of repeat transactions that they have with you. That's all very, very well. And then what that does is produce revenue for you for the particular time period. So how much money's actually come into your bank account. So how much revenue have you come in? What's it say on your profit or loss? What are those sales out there? But then from that, now we come to the important part of being in business, because it's not just about sales, although, again, strategically, sometimes it can be about growing the business without this last part. And the last part that we want to do is when they spend money with you, we need to make a profit out of that. So the fifth driver in the business is your profit margin. Now, there's two parts to margin. There's your gross margin. So if I buy something for $8 and sell it for $10, I've got a gross margin of $2, the difference between what I bought it for and what I sold it for. And then there's the other expenses that go on, your rent, electricity, things that we refer to as being fixed in your business that take away from that to give you the overall profit. So the thing that we can change the most is actually your gross margin. We do work on the other fixed expenses, but your gross margin is the thing that we can change the most in there. But anyway, so we go from the revenue, the money that's come in, take out all those expenses, and then we're left with profit. So the fifth driver in there is margin. Now, what's the trick here? I said at the start that people come to me and they're often asking for one thing, and that's growth. And what they mean by growth is that they want to get more sales in the door. And the belief that goes with that is that when they grow, when they get more sales, it's going to fix all their problems. We're constantly told about growth is the answer to building the business that you want. And that's true in some ways, and it's not true in other ways. I had Ned come to me, and his business, and this story, interestingly, for me anyway, is that he's another mechanic. And he came in and presented financials where he said that he was making $50,000 a year. That's what his profit and loss showed. But he was still having troubles, and he was incurring a lot of debt and building his debt up, and he needed some help getting out of that debt. Now, here's what I found when I had a look at his financials. Yes, the profit and loss showed that he was making $50,000 a year, but the profit and loss is not the full story of your business. It's one element, and there are other elements that go into that. The profit and loss doesn't show all the money that's going out of your business. It just doesn't. There's lots of other money, and it normally comes out of the balance sheet. That's where you'll find it, that shows the cash transactions going out of the business. More than that, you have to be careful, because the way we conduct accounting is things happen in accounting software and on bits of paper that aren't real money changing hands. So you've got to dive into it a little bit to find out what's going on. I do that with a thing called an instant assessment, or a profit first assessment we use to determine the cash that's coming into the business and out of the business and what's really left over. So anyway, what did I find from Ned? I found it wasn't a $50,000 profit. It was a $150,000 a year loss. But what he wanted to do was more marketing, Google ads, get more people through the door, more sales in order to get him out of trouble. Here's the problem. If the business isn't set up to be profitable in what it does, if you're not making money out of what you do, we'll go back to if I buy something for $8 and sell it for $10, people think just because they've done that, they're now making a profit. But remember, there's all the other expenses that have to come out, not just the cost of that item that you've sold. So if you're running a model that isn't ultimately profitable in itself, then growing it is just going to send you broke faster. We can't do that. That's the wrong thing to do. So the very first thing we have to do out of these 5 drivers is have a look at the real profitability of the business and the real margins in the business. So the number one driver that you might be surprised to know of creating a profitable and a permanently profitable business is checking in on that margin and having a look. What's the pricing like? What's the productivity like? Are you discounting out there? And discounting doesn't mean that you're knocking money off the price, although that's what a lot of people do, even when they're not asked to. A discount can be as simple as you're doing some work that you're not charging for. You're providing an item that you're not charging for. I put that into the discount category. So there's this whole bunch of things. It's bad jobs, bad clients cost you money. And one of the little keys there, a bad job, you've got to do 10 jobs the same to make up for that one bad job on average. So margin is the number one thing you have to work on. Are you actually being profitable? And by the way, your profit is not the end of the equation here. In fact, your belief and your mindset has to be that your business is there to make profit. So what we've got to do is reverse engineer and say, this is where I want to get to. Here's my goals. We all understand that. Let's set goals and let's strive to get them. Well, profit's your goal. It's not what's left over. Profit's the goal, okay? So we've got to work out what you want that to be and reverse engineer to get it. And that profit should be there to provide for your life and for other people's lives, particularly if you're employing people. You want to do good in the community. Look at my podcast with Mick Goodwin about how they're doing good in the community, how they allow their staff, their employees, their team, as we like to say, to go and do good works in the community. That can only happen because he's making a profit, because he's working towards making a profit and can set some aside to do that. When you do things like that, one of my friends separated 18 months ago and she had no assets and now has just bought a house because of the way she did it. One of my other friends who's an accountant sets aside money to take her staff away on holidays, all because they have a system in place. Number one is margin that you've got to work on. Number two, so is it up to sales now? No. Typically, and it depends on your business here, what we're looking at is if you've got customers in the door, what we want to do is see, well, how much can we get them to spend? We're looking at what money do they have whilst they're here to spend with us. And we're not talking about ripping people off. We're talking about helping them make decisions that might be more useful. When you go to McDonald's, the idea of them saying, would you like fries with that? Now, you can think about that as, they're just trying to get all my money, or maybe they're genuinely asking if you're hungry and there's something more that they can offer you. And in your business, that's the way you've got to think. Does the person really just want the cloth seats, or maybe they have kids and the leather seats would be better because it's easier to clean? And that's how you think of it, not just about making more money. It's about, again, what good are you doing? If you're doing something, are you fulfilling your purpose? And is helping people see the value in something else, is that worthwhile? So number two is that average dollar sale. How much are they spending with you when they come in? And often, like in the car sales, there's a lot more money to be made for your business from that. They set it up like that on purpose. If McDonald's are selling you fries, they're making a lot more money from those fries than they are from other parts of the business. Number three is then conversion rate. Now, sometimes I swap 2 and 3 depending on the sort of business that it is. So again, if you have people already coming to you for sales and you're converting at that 25%, well, how about if we did a bit of work on your sales process and we were able to actually increase that a little bit? So let's say we increased it by 10%. So if you'd had 4,000 people coming in and you were getting 1,000 of those, increasing by 10%. We're not saying take the 25% and make it 35%, just 25%, 10% of that, 27.5%. So 10% of that 1,000, add 10% onto that. That's what we're talking about doing. So that's 1, 2, and 3. Then it leaves us with 4. Again, you've already had people come to buy from you. So how about getting them to come back again? It's easier to get somebody who's already bought from you. They've decided they like you. They trust you. Now that they now know you. So if you have something else in your offering that suits them, maybe they'll come and get it from you. What a great idea. And then it leaves us with number 5, now going out and generating more leads. Now here's the thing. All of those other strategies cost you nothing or next to nothing to put in place, as opposed to going and spending another $1,000 a month on Google AdWords. And for some businesses, that might seem like a lot. And for some, it's minuscule. And I'm not saying don't do Google AdWords. Like, AdWords are great. Advertising's fantastic, but you've got to grow the business from a profitable model. You've got to make sure that what you're doing is making a profit and work through all the low-cost ways of generating more money and more work before you get to the more expensive way. That would make sense to me, wouldn't it? So again, let's go through them. Hit your margin first. Let's have a look at what's going on there and how we can improve it. I promise you that with even little work on some of the other areas, I've worked with businesses over years that have grown very organically, which means it's very sustainable what they do. They increase at a rate that they can cope with and provides them with profit all along the way by simply working on, 1, 2, and 3. So be careful at 4 as well. Getting people back is really important as you grow. So, haven't had to spend a lot on 5. So 1, the margins. 2, getting people to spend more money when they're with you. 3, that conversion rate, turning more of those leads into sales. Then we've got 4, getting them to come back and buy from you again. And finally, generating more leads out there that cost you a bit more money. And that's going to get you really focusing on your profit. You need to know your numbers in order to make the most out of this, okay? You've got to keep a record, we call that test to measure. Keep a record of what's going on in your business so that as we make changes, we can see how those changes are improving your business, and again, make more changes, or sometimes it could be drop stuff off. So they're the drivers of your business in an overview. And obviously, as we dive down, there's lots and bits and pieces of all of those that we can work on in order to improve your business. And that's what I want you to be working on. If you email me at success@businessunlocked.com.au, I'm going to send you my 5-way sheet, my proven profit sheet that's got the ways that you can work out how to go from where you are now to where you're going in the future. So put on it 5 ways and I'll know what to send you back. Next episode, that's just me by myself, a little bit different, to give you the tips in order to work on it. We're going to work on that margin. I'm going to take you through how that money works and some of the things to look at in your margin to help you increase your business, increase your profitability by doing the smart work, not the hard work. See you then.